Hey everyone, welcome back. I'm very glad you're here. It's officially June. Summer is coming, the kids are getting out of school, and honestly, the markets are having a pretty great time too. In today's May update, we're going to cover three things. A quick recap of what happened with the markets in May, some important things that are coming up in June that I want to make sure you're aware of, and then some financial housekeeping to get your summer started on the right foot. So let's dive in. You may have heard the old saying on Wall Street, sell in May and go away. Well, in 2026, that advice would have cost you big time. May was an absolutely exceptional month for investors. The Nasdaq finished up 8% for the month, its best single month of 2026. The S&P 500 gained 5%, capping off 9 straight winning weeks, and the Dow Jones crossed 51,000 for the first time in history. To put that into perspective, the S&P 500's forward PE ratio now stands at about 21.2 times earnings, above both the 5-year average of 19.9 times and the 10-year average of 18.9 times. Valuations are elevated, but the earnings are backing it up. So, what drove all of this? It was primarily AI earnings tsunami. Tech had its best month in years, powered by optimism over the productivity boost in artificial intelligence, with big tech once again taking the lead. Some standout moments include Dell Technologies surging 33% after reporting first quarter beat on both the top and bottom lines and raising its full year guidance. Micron crossed the 1 trillion in market cap and shares, and they jumped 19% in one session. And they finished the month up roughly 88%. Most extraordinarily, monthly performance backed by a mega cap stock in recent history. Apple also set a new all-time high in 16 of 20 trading days in May and was up nearly 15% for the month. Now, it's not all sunshine. There are a couple of things that I want you to be aware of underneath the surface. April's PCE, the Fed's preferred inflation measure, came in at 3.8% annually, the highest since May of 2023. Economists warned that the 3 and 6 month inflation trend is actually accelerating towards 4%. And the second estimate for Q1 2026 GDP came in at 1.2%, revised down from 1.6%. So we have slowing growth and rising prices. That combination is something that we're watching closely. There's also still the ongoing conflict in Iran driving oil prices higher. Brent crude remains near $105 per barrel, approximately 40% above pre-conflict levels. The bottom line, May markets were strong, AI is real, but there are pockets of risk that are worth keeping an eye on that bring us into what's coming up in June. So, June is a genuinely important month. Let me walk you through 3 key events. The first being the SpaceX IPO on June 12th. This is the most talked about financial event in years. SpaceX has officially filed its S-1 prospectus with the SEC and plans to list on the Nasdaq under the ticker SPCX, with pricing expected on June 11th and trading beginning as early as June 12th. The offering aims to raise $75 billion at a valuation of $1.75 trillion. To give you context on how big that is, the rocket, satellite, and AI company's plan for a blockbuster Nasdaq listing in June is described as unprecedented in history. So, what does SpaceX actually do, and why does it matter? The IPO combines SpaceX rocket launch business with its Starlink satellite internet division and xAI, the artificial intelligence company that Musk merged with SpaceX in February of 2026. Starlink is the financial engine driving the valuation. The satellite internet service now has more than 10 million subscribers globally and brought in $11.4 billion in revenue in 2025. However, and I want to be honest with you here, the SpaceX IPO carries substantial risks. The $1.75 trillion valuation and prices prices in decades of future growth across multiple speculative businesses. First-day price surges on high-profile tech IPOs frequently retrace 20 to 40% within the first 90 days. And some analysts recommend waiting until SpaceX first public earnings report, expected early November 2026, before committing capital. SpaceX also operates under a dual share class structure. Class A shares available to the public carry 1 vote each, while insider Class B shares carry 10 votes per share. Elon Musk holds 85% of the voting power, meaning investors in the IPO will have minimal influence over the company's decisions. But why should that matter to you as an investor? Even if you don't buy SpaceX stock directly on an IPO this size, potentially the largest one in history, it's going to move the markets. It could suck away capital from other tech stocks in the short term, or it could fuel more euphoria. So we're definitely going to be watching it closely. The second event is the Federal Reserve meeting June 16th and 17th. This is arguably the most consequential event of the summer. The June 16th and 17th meeting marks Kevin Warsh's first rate decision as the new Fed chair. Now, with inflation at 3.8 and core PCE at 3.3, with the GDP slowing to 1.2%, and rate hike odds near 50%, this is described as the most consequential meeting in years. So what is the FOMC? The Federal Open Market Committee is the group within the Federal Reserve that sets interest rates. Those interest rates directly affect everything from your mortgage to your car loan to your savings account yields and bond prices. When they raise rates, borrowing gets more expensive. When they cut, it typically stimulates the economy. Markets currently price approximately 65% probability that the Fed will continue to hold at 3.5 to 3.75. Critically, this meeting is June. Is a meeting. It's a SEP meeting, which means it includes the summary of economic projections, including most of the watch dot plots. The dot plot matters because it gives the clearest signal on the Fed's rate path going forward. So this isn't just about what they plan to do on June 17th. It's about what they signal for the rest of 2026. The biggest wild card remains the situation in the Middle East. Any confirmed peace deal would immediately reset energy prices and inflation expectations. No deal means oil stays elevated, inflation stays hot, and the new Fed chair faces a very difficult decision. And what does this mean for your portfolio? We've positioned basically with this uncertainty in mind for months. If the rates stay on hold and the tone is dovish, you could see bonds rally and rate-sensitive sectors like real estate, utilities catch a bit. If Warsh sounds more hawkish, expect some more volatility, especially in growth stocks trading at stretched valuations. The May jobs report drops on June 5th. A hot number hardens the case for a rate hike at the June FOMC. A miss could calm yields and extend the rally. And the June 10th CPI could still introduce some volatility through current pricing, which is kind of embedded a little bit of a limited scope for an immediate policy shift, absent a sharp deterioration in inflation or growth. These two data points will set the table for the Fed meeting. Overall, there's a lot going on. All right, so let's talk about you. June is a fantastic time to do a financial mid-year checkup. Think of it like your annual physical, but for your money. And here are the top things that I would encourage every client to think about this summer. First would be a mid-year tax check. Don't get surprised next April, we're halfway through 2026. And if you've had any major income events like a bonus, a big capital gain, rental income, or you sold a business, now is the time to review your estimated tax payments. The Q2 estimated tax deadline is June 16th. Missing it could mean penalties. So let's get ahead of it. The second is Roth conversion opportunities. With markets up strongly year to date, some of you may actually have higher balances than expected. But here's the flip side. Any part of your portfolio pulled back earlier in the year, that could be a window to convert a portion of your traditional IRA into Roth at a lower tax cost. We would need to run the numbers individually for each of you together because your income and other factors have a major part to play in this. And the third is 529 plan reviews. If you have kids or grandkids or heading back to school or off to school in the fall, now's a great time to top off a 529 plan. Contributions are not federally tax deductible, but many states offer a state income tax deduction, and the money does grow tax-free when used for qualified education expenses. Fourth is a beneficiary review. This one is simple but powerful. Life changes, marriages, divorces, births, deaths. When is the last time you looked at your beneficiaries on your retirement account and insurance policies? A quick 10-minute review could save your family an enormous amount of headaches later on. And I have found some 401k plans out there that don't have listed beneficiaries. It's really important to check that too. Fifth, rebalancing. With technology up 20% in May alone, some of our portfolios may have drifted significantly from their target allocation. So I will be reviewing rebalancing opportunities, especially in our taxable accounts. We want to be strategic about what we buy and when we sell. And 6 would be HSA contributions. If you are enrolled in a high deductible health plan, make sure that you're maximizing your health savings account. For 2026, the contribution limit is $4,300 for individuals and $8,550 for families. HSAs are the only triple tax advantage accounts that exist. Contributions are tax deductible, the growth is tax-free, and the withdrawals for medical expenses are tax-free. 7th, cash flow planning for the summer. Summer can be expensive. I have a 12 and 13-year-old, and I know this very well. So think about time, your travel, home projects, kids' activities. And if you're drawing from your portfolio, let's make sure that we're doing it in the most tax-efficient way and not accidentally triggering any unnecessary capital gains. So to wrap up, May was a strong month, but we are entering a stretch of June that has some real headline risk. A historic IPO, a pivotal Fed meeting, and key inflation data all landing within the same 2 weeks. So it is my job and our job here at Soundview to make sure your plan is built for all environments, not just the good ones. But as always, if anything I said today prompted a specific question to you or your situation, please don't hesitate to reach out to me or to your advisor. Enjoy the summer, stay safe, and we'll talk again next month. Take care.